Folks, welcome to the Contrarian Trader. This is Robert Desmond. Before we get into DOM, Dominion Resources, as our trade in the coming week, I will have another video coming out tomorrow as well. The ultra short silver ETF, the SLV, and I'll be going over that in great detail tomorrow. But today we're going to spend some time on Dominion Resources. Before I get to it, I want to do a pulse check on the market. Each Sunday, I prepare for members the week ahead commentary. It's about a 35-minute video. I send it out to members only on Sundays. I'm going to post last week's. If you're watching this on YouTube, I'm going to post a link in the description section below. If you're watching this on the Contrarian Traders homepage, just check. I'm going to post it. I'll label it as the prior week's, the week ahead commentary. Just a sample of what I discussed going into last week. You check it out for yourself, the accuracy of the information they gave out. I think they gave some really good warnings, gave some good stocks to watch, which panned out very, very well. So before I get into Dominion Resources, I always like to do a pulse check. What's the pulse check? We've had a market that has been in rally mode for the past couple of weeks, especially in a seasonally weak period, historically. So the market's rallying, and we need to ask ourselves, why? Why is it rallying? Let's backtrack 2 weeks ago. You had consumer confidence that was released on August the 28th, a market expectation of 65.7. The actual came in at 60.6. What did the retailers do? They rallied. Fast forward to September the 4th, which was last week, you had the ISM index. It's the Institute for Supply Management Index. A reading of 50 or higher is a signal of economic expansion. A reading of below 50, in this case, 49.6 was the actual, is a signal of contraction. So a caution flag is on the track when it comes down to the type and quality of economic data that we're receiving. Fast forward to September the 7th. You had non-farm payrolls, market expectation of 130,000 new jobs. I believe the number on CNBC was 125,000. They were all wrong. These fancy pants, well-dressed, really well-spoken millionaires, they get it wrong all the time. All the time. But I digress. I can go off on a tangent. So they were saying 125,000. Market expectation overall across the street was 130,000. The reality was 96,000 jobs. That's not the worst part. The 2 prior months were also revised downward. Now, what you're going to hear are the liberals come out and say, well, the unemployment rate dropped by 8.1%. We have everything right. Elected by Barack Obama. Are you nuts? Yes, the unemployment rate dropped. It means nothing. That's for the idiots. That's what they're speaking to the idiots that are out there in this country. They don't realize the reason why you have an 8.1%, which is a drop from the prior month's reading. The reason why you have an 8.1% drop is because you had 500,000 people that just stopped looking for work. They dropped out of the workforce, went onto disability, etc. We really need to put into focus the quality of the economic data that we're getting and the type of news that the media is printing for us. Trust me when I tell you, most of the non-financial media, when they report economic data, they don't have a clue what they're talking about. They'll say, oh, the unemployment rate dropped last month, and they'll say that it's a victory for the policies of this government. And I can't stand either side of the aisle. I'm a fiscal conservative. I don't care what you do in your bedroom. I care about what you do with my tax dollars. If you are not a good steward of my tax dollars, you're fired. I digress. If you become a member, trust me, I will not talk about politics. I only do it for the free members because you're my free audience. So anyway, all right, let's get on. That's my opinion on the overall markets. I stress, if you become a member, trust me, I will not be talking about politics. I don't like when actors talk about their political views. However, mine deals specifically with the economy, and however, I do not give my political views to members. We're far more detailed in terms of analysis of the overall markets. So I pointed out to you 2 weeks worth of economic data, which is there was some good data that was released. However, by and large, it shows that the economy is slowing. So why is the market rallying? Normally, I would be saying, wow, these are contrarian indicators. The market is rallying on bad news. There's only one problem. The market is really rallying due to the fact that, A, and this is the big one, Bernanke is got the carrot and the stick. He's got the carrot out there, QE3. You had Diane Swank on CNBC yesterday. She's saying that they're going to announce QE3 next week. I don't know. I tend to doubt it because the benefit of QE3 over the prior QE1 and 2 is going to be greatly diminished. Bernanke has far more power with just the carrot. And I would be concerned about this market, and I have shorts in this market. I have longs as well, but I've set those shorts. But I would be concerned being net long the day or the day following they announce QE3. Because the question then becomes, all right, what next? What now? Because the economy is not growing. So what's next? What rabbit is Bernanke going to pull out of his hat? There's not much left, folks. There's not much left. Rates are at zero. What are they going to do? Stay at zero or near zero? The other factor is that the Europeans did not lower their interest rates. That was good for the euro, which rallied. I went short of the euro on Forex on Friday. The U.S. dollar corrected, and of course you have, as sick and perverse as it is, I always say that, you have an inverse relationship between the weakness of the dollar and the stock market. When the dollar corrects, the market rallies. It's just the way it is nowadays. It hasn't always been that way, but since 2002, that's the way it's been. Let's get on to Dominion. Dominion Resources, this is NYSE's traded stock, symbol DOM. I like Dominion. It's been beaten to death. You have an RSI at 15.60, very mature Stokes. They're hooking up, very nice. Very far extended from its 50-day moving average. And I'll tell you what, the first 3 people that can tell me why I love this candlestick formation here and makes me bullish, what candlestick formation this is, I'll give you a year's membership to the Contrarian Trader for $100. But you need to either post on YouTube or send me an email. I'll write out my email address, robert@thecontrariantrader.com. You should be seeing that right now. Or if you're watching this on the homepage, just go to Contact Us, link to my email, send me your answer. Again, the first 3 people, I guess. Volume to the upside is very, very good. MACD histogram leveling off. So I like the chart of DOM. There are a couple of things that I would like to see more of in terms of backing and filling. However, I believe that Dominion has seen a bottom for now anyway, and it should rally very, very soon. Members, I will be sending out an alert. Let's take a look at the historical chart on Dominion. You can see beaten to death, and it's critical. This is a monthly chart. It's always critical to pull back and take a look at where your historic support and resistance levels are. And you can see that here we are. We hit the lows seen last in, 1999. Actually 2000, January 2000. It looks like it first hit this level in December 1999. Then again, double bottom retest at the $14 per share level. And you can see key reversal, rally, off to the races. It topped out in 2006. It's rallied, retraced 100% of that move now. So I like the stock as a trade right now, not necessarily as an investment. I have different criteria for long-term investments than I do for a trade. So right now, it's a trade, and I'll be going into the intraday charts with members as well as the impact of a short covering rally, how much short interest is on Dominion, and how much of an impact that's going to have on any type of a rally. Before I take off, folks, let's take a look at a few of the stocks that I profiled last week on the weekend commentary. Again, if you're watching this on the homepage, check out that blog post. It's from last week to members only. But I'm making it available to all free visitors. It's also linked to YouTube in the description section of this video. Dolan Company, NYSE traded stock, symbol DM. We have profits in this stock. We bought it when nobody else wanted it. I profiled it last week to members. We got long, and we have a very nice profit in this stock. You want to get long of this stock? It's too late. It's too much risk. It's very, very expensive. You're looking at a PE up here of 6.15. That's a current PE. Forward-looking PE is up in the teens, about 16, 17. Stay away as an investment. This is not an investment. It's a trade. So please, I beg of you, be careful. Do not go jumping in this stock. It's all short covering right now. You had a 4-day short covering move in the stock. Stay away from it right now. Okay, the next stock I focused last week, and again, you can view this video, you can view my commentary, it's no different from last week. Symbol NTE, NYSE traded stock, Namtai Electronics. This stock, this is a monthly chart you're looking at here. Beautiful breakout off of the double bottom formation. Broke out above the W, the middle of that W formation. Great, or pivot, whatever you want to call it. Great breakout. I would expect to see a continuation move higher. However, I profiled it last week as a short trade. Now, let's go to the daily chart really quick. I mentioned that the stock had gone parabolic. You had an RSI at that time of above 90. Stocks were in a strong uptrend, but they were threatening to roll over. The stock had come too far, too fast. It's probably a very good company. However, the opportunity as a trade was to the short side. We wanted to take advantage of the extreme overbought condition of the stock. So that's why we profiled it. I had members that traded this stock. They made great profits. Congratulations to you. Going back to that monthly chart, you could see we knew where resistance was. I mentioned that last week, this is the same exact chart that's on the video, that primary resistance level number 1 looked good, but I would have preferred if it tried to break through and head to the second resistance level, which is far greater. It didn't quite make it there, but that key reversal on Wednesday was your signal. If you were building a position on Tuesday due to the topping tail, then on Wednesday, when you saw this key reversal on the day, that was as bearish gets. There were sellers above. The market was telling you that. That's when you should have been adding to your position and enjoyed the move downward. Use a trailing stop loss order, and you probably would have been taken out near the lows here and not even gone into the weekend with a short position. All right, folks, we touched upon a lot today. The economic data is a problem. It's a problem. And the traders are willing to bid this stock market up because they've been sitting in cash. They're afraid of going into Q4, closing out their books, once again, as they always do, underperforming the overall stock market. So they may put some money to work on the hope that Bernanke may announce QE3. I'm not convinced of it yet. By virtue of the fact that you have the U.S. dollar that's sinking, it's a race to the bottom on currencies. I'm going to go into this in further detail when I go into my analysis of SLV in my next video, so keep an eye on that video. The dollar impact on the market is great. It's huge. So as the stock market rallies, my guess is you're going to see the U.S. dollar to continue to move lower. The catalyst for that move in the stock market is the dollar going lower. It makes our products cheaper overseas. So it only makes sense. The problem for this economy is going to be when the Europeans come to realize they must reduce interest rates further. When they do that, you're going to see the stock market correct because you're going to see a rally in the U.S. dollar. Again, more detail on the SLV tomorrow. I'm going to cut this short now. Remember the contest on what's this candlestick chart pattern here? The first 2 people, just email me or post it on the YouTube channel. I'll give you 24 hours and I'll announce. I'll give the answer then. Folks, have a great weekend. If you have any questions, give me send me an email. And please, folks, join us for the 14-day free trial offer. If you don't like it, cancel. Have a great Mega Bee weekend. Bye-bye.